Hi everyone, my name is Kenny. We'll be looking at compliance as a whole in terms of tax and tax liabilities, withholding tax, VAT, company income tax, tax objection, and the rest of them. In this series, we'll be looking at VAT compliance. And we all know that VAT is a consumption tax and is part of the areas in which the government makes a lot of money. And the VAT is not paid by the company, VAT is paid by the customer that buys goods and services from the company. So we'll be looking at understanding the VAT in Nigeria and who should pay VAT, who should file VAT, and how you should comply with VAT. So looking at this now, our aim is to understand the current VAT position in Nigeria, know who should file VAT and who should the exemptions for VAT. Understanding this will help you to know how to walk through and how to file your VAT and tax promise, how to handle your businesses, and a lot more. So let's go. So what is VAT? Of course, we know that VAT is a consumption tax. VAT is not, companies are the ones that pay the VAT, but in a real setting, they are just an agent of the government. They have been appointed by government to collect VAT from customers. So companies pay that VAT they collect from customers. So it doesn't mean that it's the company that pays it. They are paying it on behalf of the customers. So VAT is an indirect tax. So if a company sells, that is when VAT comes in. Assuming a company didn't sell anything in a month, there will be no VAT. All you need to do is to file nil VAT. So, but when a company sells, it's expected that the company adds 7.5% to the goods and services rendered to their customers. So it means that it's customers that paid VAT and not the company. So I believe you understood this. So we pay VAT on goods, we pay VAT on services, and we pay the rate is 7.5%. So when you are a company and you buy goods or you buy goods or services from another company, you pay an input VAT. Input VAT, they are VAT paid on purchases. But when your customer comes to your shop to buy something or comes to your company to buy something, your customer pays an output VAT. Output VAT are VAT on sales. These two things now, you need to consider them and pay the difference to the government. So when your input VAT is higher than your output VAT, when your VAT on sales is higher than your VAT you paid on purchases, that is when you remit to the government. But if your VAT, your input VAT is higher than your output VAT, then you will seek for refund. Of course, you know that the new tax law have made it possible that government will refund people excess VAT going forward. So we look at VAT companies that comply to VAT. Everyone is mandated to comply with VAT. Even business, a sole proprietor partnership. Once you're doing business, once you have a you registered your business, you are expected to collect VAT. But the magnitude or the definition now depends on whether a company is a large company or a small company. The definition of a small company is that that company must have or that company won't make more than 100 million revenue. So if your company makes more than 100 million revenue, they are no longer a small company. So there are things you need to understand from this place. And one of the things is that you need to be careful. You need to understand the revenue strength of your organization. So the 100 million benchmark or restriction now means that the company is expected to make revenue of 8.3 million a month. So if a company does not make up to 8.3 million a month, they are exempted from filing monthly VAT. That is the implication. But when a company makes more than 8.3 million in a month, it means that they are expected to collect VAT. Now the question is, what if the company collects, what if the company makes 6 million, 7 million in a month? What will happen? I won't have disturbed myself if the company makes 4 million because 4 times 12 is giving you 48. 2 million, 2 times 12 is giving you 24. When a company makes 6 million, 7 million, it is a red flag. It is a danger period. Why? Because when you multiply it by 12, even by 10, let's say for example, company makes 7 million a month, by 10 it's almost 70,000. Something might happen. A big contract might come in, maybe a contract of 40 million, 50 million. You see that the company has crossed its threshold, and by then the FRS will be requesting for payment of VAT. Now, what will now happen? Those businesses he or she has done, or the company has done, that amounted to 70 million, you will see that the customers have gone. So how do you collect the VAT? So my advice is, when you are making, you look at your revenue strength. When you're making revenue of 6 million upward, please charge VAT. Charge VAT to avoid having issues. To avoid having issues. To avoid having issues. Another thing I want to say is that you may not be there to protect the company. So make sure that you charge VAT. You charge VAT. Because when the FRS comes, your business on your customers won't be there again to charge VAT. So there are some exemptions for VAT. There are the exemption is that your company will not have more than 100 million. So this 100 million threshold now is for small company. So, but if your company makes more than 100 million, they're expected to pay VAT. I've told you what to do. Look at the revenue strength of the organization. Determine what the revenue strength is. If it is above 6 million, charge VAT. There are some businesses, customers that when you include VAT on their bill, what they will do is that they will run away from you and you might lose the business. So what you are going to do, make your price VAT inclusive. Don't disclose VAT separately. Just keep them, factor in your VAT in the price of your goods and services. Factor it in and issue it to your customers. Don't separate the invoice value from the VAT value. And by so doing, it will help you to overcome or to avoid the issue of uh, you're losing customers or customers querying why you are charging VAT. You need to protect the company. So if you didn't protect the company, it becomes a very big issue and a very big problem for you. Another thing is that there are three levels of VAT. There are three things you need to know about VAT. We know we have a VAT exemption. So when you are exempted, just like we talked about, a company that has 100 million or below not paying VAT or not collecting VAT. It's not that they are going to pay VAT, but they are not going to collect and remit to government. But for filing, they must file their revenue. Even if you are exempted, you must file your revenue, must disclose your revenue on a monthly basis. You use the status, whether it is on your revenue or your revenue, breakdown of your revenue. You use the status whether they are exempted, whether they are zero rated VAT, or they are VATable, the standard rate of 7.5%. For exempted VAT, nothing will happen. For zero rated, they are VATable but at a 0%. Then for standard VAT, you apply 7.5%. So these things are very important. And once you know them, you also know your rights. So zero rated VAT are supplies that are taxable at a 0%. They are supplies, but they are taxable at what? 0%. So it means that you apply zero, which means you're not collecting VAT on them. Then VATable or standard VAT, they are VATable and you apply the rate at 7.5%. So it means you're going to collect your VAT. And again, is that when you pay VAT on purchases, you use it to reduce your input VAT, your output VAT, your VAT on sales. Use it to reduce your VAT on sales. When you buy goods and services, when you buy products and you pay VAT on them, there are windows for you to claim those VAT. You use it to reduce the VAT you are remitting to government, because VAT is borne by the consumer, not the company. So when you buy and pay VAT and you didn't use it to reduce your VAT, your output VAT, the money you are remitting to government, you are losing money. You are losing money. And a time will come when you may not be able to claim it again. So required document for VAT filing, you ensure that you have a valid invoice for all your invoices, all the invoices that you have given out for the month. Remember IFRS 15, which is talking about revenue recognition for those that are in construction company, those that are service company, those that render services, and those that are render services for service company. Remember, it's very important on recognition of revenue. Most times customer will pay in 100 million and you render service of 50 million or 20 million. That 100 million entered your account in a particular month does not mean you're going to pay VAT of 100 million. You're only paying VAT on the invoice goods and services and not on the money you receive. So you need to be very careful, very meticulous about this area. Ensure that what you're doing is in line with the standard. Ensure that what you're doing is what is obtainable in practice and the rest of them. Then you also need to gather all your output. You also need to gather all the VAT you paid on purchases. You gather them. You gotta have the receipt for them, have the receipt for input VAT, have the receipt for output VAT. That is invoicing of your goods and services. You need to issue receipt. One of the problem we have is that most of the businesses do not issue receipt. And you know that in this our new dispensation now, we are entering into e-invoicing, electronic invoicing. So FRS now require each company to have a software that accounting software that can transmit their invoices. As they are raising the invoices, it will be reporting to FRS dashboard. With that, FRS can be able to determine the VAT of these goods and services. So you need to, if you are managing a company, you need to encourage them to have an accounting software and to have a digital or a software that generates invoice for them. So at the end of the month, as you are compiling, as you're computing your VAT, you are expected also to gather the supporting documents and keep them for audit purposes. If you don't do that, it will affect your company. So what are the key takeaways here? The key takeaways is for you to understand that in this 2026 now, you need to be very careful. If you're a tax consultant, you need to look at the revenues that your organization receive. You need to look at the invoices. Sometimes some organizations they don't pay the VAT based on the goods and services. They will just tell you that when they include VAT in the invoices, the customer run away, and as a result of that, they make revenue of 20 million. They decided to pay 500,000 at VAT. It doesn't work that way. It doesn't work that way. If you include VAT on invoices and it makes your customers to run away, include it in your price. Don't separate it. That's one point. Number two, ensure that you pay your VAT as at when due. Now that we have the law have made provision for exemption, ensure that you disclose your revenue properly, because when you file your VAT, you are actually or indirectly reporting your revenue. So at the end of the year, when you are going to file your company income tax, the tax authority will now use the financial statement you have submitted to match it against the VAT you have filed monthly, and they will now discover that there is a discrepancy. You filed a revenue of your company income tax is showing financial statement is showing revenue of 50 million or 100 million, but the VAT you paid is VAT based on 1 million or 2 million. It becomes a very big problem. This will affect your level of compliance, and still remember that interest and penalty are paid on retrospective basis. The interest is paid on retrospective basis. So what it means is that FRS will take it as far backward when that issue occurred and start counting interest on a compounding basis. Interest is 19%. Of course, before you know what is happening, you pay more than you ought to. So learn to comply as at when you do what you ought to do at the right time and save yourself from stress. So we we are still doing this series, and we would love you to engage on our platform. As time goes on, we expand the scope of our training to help you gather more knowledge on VAT and the withholding tax and the rest of them. If you don't know how to do your company income tax filing, VAT filing, withholding tax filing, and what have you, these are our numbers. reach out to this number. Reach out to this number on WhatsApp. We usually have training on a weekly basis. We train you, give you an understanding of how to file your VAT, how to file your withholding tax, how to file withheld VAT, how to compute and file your company income tax, how to upload your financial statement, and others in your tax program. Thank you so much. Remember to subscribe to this YouTube channel. Have a great day.